As always, nothing in the video should be construed as investment advice or recommendations. Our box scores, we had the S&P 500, it finished down 1.09%. We had the NASDAQ QQQ finishing down 0.72%. Our IWM small caps were our biggest loser, down 1.5%. Dogs of the Dow Jones were down 0.84%. And the ARK Innovation ETF, Kathy Wood's ARK, we are still long. Our January of 2023 40 strike ARK calls was up 2.7%. Now you can see pretty much everything closed on the low end of its day's range except for ARK. And what is very interesting is that the volatility for most of these indices closed lower while the indices were also red. So that is a bit of a positive divergence. Now take a look at this. We did have weak breadth across the board and everything aside from ARK. We had 26.9% up volume, which is not so great. And my trend model flipped from +3 to +1, and then from +1 to -1. So let's dive in. We'll talk about how I handled the adjustments, the trades that I did, all of that good stuff. Finviz heat map, check this out. Tesla was actually showing some relative strength today. Where you can see the semiconductor stocks, they got hit pretty hard. Energy has just remained buoyant. And we got yet another rally in crude oil today. And you can see this was pretty much, I don't want to call it a bloodbath because a couple weeks ago, that's when we were really seeing the bloodbaths. But overall, things are pulling back. Interesting though, Apple is definitely showing a bit of a change of character. This name has been showing relative weakness. Now it is starting to show relative strength. Google was up 0.01%, so we are starting to see some changes going on under the hood. In terms of our sectors, Chinese equities. Look at this. The KWEB ETF was up another 5.81%. I'm currently long the FXI. I'm long some call options there. So those are leaps. They're now up over 100%. I still feel like I do not have enough exposure to these Chinese names, but I'm pretty pumped that I at least have some exposure. I'm definitely going to be watching these names for sure, breaking them down, because these Chinese stocks, we've been mentioning this, but they were in a real bear market. If they're coming off those bear market lows, has a lot of the rally already taken place? Sure, you could say that, but if this is really a legitimate low in these Chinese stocks, there could be plenty more to come from here. The solar ETF, it's in our number 3 momentum slot, but it did finish down. And what's very interesting about today's action is that, hey, the markets overall, they didn't fare so well, right? But under the hood, look at this. Innovative tech was up 0.33%. What do you know? Genomic stocks were up 2.37%. Biotech as well. So yeah, very interesting divergences where, again, we're seeing the riskiest stocks beginning to outperform, which is a beautiful thing. Style factors. Take a look here. We had the high beta style factor. It was down 1.47%. Small cap value down 1.71%. So some of these areas of the market really did take a beating, but momentum and growth were down the least. That is definitely noteworthy right there. Because remember, these growth stocks, they have been completely left for dead, and we have been shouting out to all of Pristine Capital members. And it's a lot easier with that because, we just send out the trade alerts and I show everyone what I'm doing in real time. But even for you guys that are watching these videos, we've been well aware of this trend that these growth stocks could as well be bottoming. Let's take a look at the indices and then we'll dive into my trades for the day. Let's see where we're at. Now remember, we have our CPI data point. It's coming out on Friday. So now we're only 2 trading sessions away. We got Thursday and then boom, it comes at 8:30 a.m. the following day. So remember, this is a pretty big binary event. Now, what I'm starting to believe, and this is a little crazy, I'm actually not even sure if I should say this, but I'm starting to think that, look at this, energy just continues to rally. Look at what's going on in crude. And for whatever reason, even though crude is having this mega rally and these commodities are still going, the S&P 500 remains strong. Like, take a look, this is DBC. Even though this is happening, this is also happening. ARK is moving up. ARK is actually breaking out of value. And we're seeing some good moves in a lot of these growth stocks. Like, look at Global E. This is my biggest position via common shares. This one was up 6.14%. It's breaking out of value. So how could that be happening? Treasuries are selling off. I'm beginning to believe that it almost doesn't matter what the inflation print comes out to be on Friday. I think most investors are under the assumption that even if it comes out a little bit hot, that inflation has indeed peaked. And I believe they're starting to bid up these growth equities for that reason. So the plot certainly thickens. This can be very interesting when that data comes out on Friday. But for right now, I'm really just trying to take what the market gives me. And what did the market give me today? Well, the S&P 500, of course, the punters that were chasing into yesterday's highs got absolutely punished. But look at where we ended up. Did we really end up in like a crazy spot? No, we got down to levels not seen since, dun dun dun, drum roll, yesterday. So yeah, nothing too crazy. If you're like a day trader, you're like hyperactive on the screen, probably felt like it was World War III, but to be honest, it was just some pretty run-of-the-mill action. What I will say though is directly in the morning when the market opened, the market was pretty much flat and it was just kind of hanging out, but my trend model immediately flipped from +3 to +1. When that does happen, I have rules in place. I have a detailed playbook. It's all written out. I share that with Pristine Capital members. One of those rules is I want to make sure that I'm contingency planning, managing risk on existing longs, basically preparing just in case the trend flips negative. And one of my rules is that I cannot enter new swing trades on the day that we flip from +3 to +1. Why is that rule in place? Well, funny you ask. It's because in the past, I have entered new swing trades as my trend model has flipped. A lot of times when my trend model flips, it does proceed, a move lower in the market. That's a rule that I added over time. And yeah, it definitely serves me now, because the worst thing that could happen is you manage your risk, your contingency plan is in place, and then you don't need to use it. And if the trend model flips back, then go crazy, adding new positions, whatever. But yeah, so that was really my MO for today. Take a look here. So in the spirit of just contingency planning, immediately right off the open, I had sold these KWeb June 17th 30 strike puts yesterday. I sold them for a credit of 68 cents. I bought them back pretty much right on the open for 32 cents. Now these, I could have held them until June 17th. Probably would have collected the full credit, which is great. But when you're able to capture over 50% of the value of the options trade in just like one overnight session, for me, you have to think about time value of money and the buying power that's being taken up by holding this trade. And so I just popped right out. I want to continue just turning over my edge and really just keep it moving. And then the fact that the trend model flipped +1, which is more of a reason to play it safe, take that off. I exited the remaining half of my RH common shares for $307. And I had paid $296.50 for those, so that was great. And I just figured if the market decides to zoom higher, who cares? But I'm going to close this stuff out. You'll notice like I was doing this at 9:43. And at 9:43, where was the market? So yeah, you can see here, like as we open this morning, yeah, we were up at these levels, like somewhere up in here. And yeah, I just said, hey, my trend model flipped, so time to manage my risk. And then I ended up going for a run. I had like a killer run I posted on Twitter, because I have a 5K that's coming up in July and I'm trying to prepare for it. But yeah, once I buttoned up all my risk, made sure my contingency plan was in place, I said, hey, I'm going for a run, went for my run. And then at some point when I was on my run, this happened right here. I cannot stress this enough for people that are trying to like find their way in trading. A lot of people that I talk to, they're like, oh my gosh, like I need to know what's going to happen next. Like, I just need to continue to consume information and like, I'll get a better market view and like whatever. It's all about just finding some sort of system that works for you. And then once you're just in tune with the system, you start focusing on like, how do I improve my system? Or how do I make sure that I'm really adhering to my system and just following it like glue? How do I work on my execution? Like you start working on the finer details rather than just like searching for a narrative, searching for like, basically you're chasing ghosts. But anyway, yeah, so I took off some of those trades. What else did I do? HPQ, this is a good example of a losing trade here. So I closed out my HPQ common shares for $38.70. This was a position that I actually added to this yesterday. See, I put here my trend model flip from +3 to +1. So I want to make sure that I'm contingency planning and risk managing. For whatever reason this stock is losing relative strength, I'd love to buy it back higher at a later time. That's really just like what I've noticed for myself, my own psyche. I just have to approach things with that mentality. Hey, I would love to buy it back at a higher price later on. But look at HPQ. Closed out for $38.70, bought it for $39.23. That's like I took maybe like a 1.5% loss on that one. And again, like I had high hopes for HPQ. This is a Warren Buffett name. I'd been talking about it on these videos. Up until today, I was like, hey, this position, like, I'm going to build it out. It could be one of my core positions. And then if the market breaks higher, like, this is likely going to be a leader when that happens. But what I can see happening here, this stock has been a huge beneficiary as market participants. They've had this like bid for value. We need value stocks, we need cash flow, we need earnings, like all that stuff. If now the marketplace is starting to transition more to growth stocks again, which is primarily what I own anyway, and like the high flyers, like it's time to bid those names. Even though this is a great company, it could just have some relative weakness for that reason. So here's another thing, just trading over time, you start to pick up on prior pitfalls that you've had. So this name, it had its first violation right here. The violation was it was holding this tight consolidation and it dipped inside of this monthly value, or it retested the 10-day EMA, right? And this is where I actually bought a little bit more. I filled out my position. We had a nice move to the upside yesterday, and it just looked like, oh man, this is even better now. Like this is getting juicy. We just had this shakeout, and here we are. We're right back into this pattern, baby. But now today, I closed out this position at 38.72 or 38.82, so I got it very close to the top end of the day's range. But look at this now after the fact. This is just another violation. Like, think about it. We closed above value, and now today again we opened up inside of value. So you start to get those little tells that, hey, why is this one, if this is such a good relative strength name, why is it doing this? Why is it not holding the level? And a lot of my other holdings are. So it's super important. Don't get attached to the stock. You know, even if it's like you got a bunch of good reasons to be bullish on it as a trader, you got to just be like, you know what, I'm done with this thing. Like, who really cares? And it's not like you ditch it forever. You just say, hey, I'm glad to buy it back at a later date. No worries. Even if it's later in the day, you could always buy it back. But yeah, that's definitely a learning lesson I picked up over time. And yeah, for me, it's like I'm just at a point in my trading where if something's not perfect, or I don't want to say perfect, but if something is not A+, and then it's also turning into a loser on me, and like now as part of my end of day position log, like I'm tracking now my percentage of winning trades that I have on the books and my percentage of losing trades, and I'm establishing rules around that as well. Like you're not allowed to hold more losing trades than winning trades, like that sort of thing. Like again, as you start to fine tune your process, you have a reduced tolerance for violations, that sort of thing. So anyway, yeah, that was a losing trade, but it was just a really good example of, a proper way to handle a losing trade. And then what else did I do as part of my contingency planning? This was before I went on my run. I moved the stop up on my Celsius common shares to $63.52. And my cost basis on that position is $59.43. I've already taken off a third of that position at $67.44. So no matter what happens, even if the CPI print comes out, the market just flops, I'm gonna pull off my Celsius for a winner. Same thing with my Global E. My cost basis is $17.44. I moved my stop up to my cost basis. So by adjusting these stops, I'm actually altering the risk profile of my portfolio. So this is the kind of stuff where, like, as you develop into a professional trader, these are kind of like the finer points that you're working on. Like, you'll notice, like, you'll start to go into conversations with other traders and other people, and like the main thing they're focused on is like, is the market gonna go up or is the market gonna go down, or like whatever. As you start to just develop more and like you have your own system and like stuff like that, then it really just becomes like, I don't even care if it goes up or down. Like, I have my positioning. Of course we always care, of course we always have our bias, but it's really just like, hey, I need to make sure that I'm bolted in and that I'm gonna follow my system. Anyway, and let's take a look at these. We have Global E. Global E, again, this chart just looks absolutely beautiful. You can see my alert is set right there at 1744. And I bought Global E literally the day that it was bottoming right here after it reported its earnings and it had that gap down. Yeah, Celsius still holding in very nicely, and it's just developing this pattern and it's really tightening up. I think Celsius still looks pretty fantastic. So into the close, you can see at 331, basically I obeyed my rules. I kind of just like walked away from the market for a little bit. And I was talking with one of our members. He's like building out some valuation stuff. So I was just chatting with him. This TNA, this is the triple leveraged small cap CTF. I noticed at 331 that, hey, like I had raised, I believe it was like a 36% cash buffer pretty good spot. And I noticed that we got this divergence into the end of the day, like I showed you earlier, that the volatility of the Russell 2000 fell today. So I wanted to take advantage of that. So I put on like this short-term scalp trade, bam, bam, bam. And it's in the TNA. So we'll see what happens if we get like a little bounce tomorrow or whatever. I'll probably take TNA off. One other thing I want to show you is, and this is a side note, this is on our Pristine Capital website. We just added our FAQ page. So feel free to go ahead, visit pristinecapital.net. If you want to take your trading to the next level, you want to work in a community of traders, this answers a lot of questions that you might have about the service. As always, just feel free to reach out to me as well. That being said, that about does it for this market recap video. Enjoy the rest of your evening. And as always, I'll see you all tomorrow.